Hi everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. Today, we explore the recent fluctuations in the US equity markets and ask the question, is this a healthy correction? I'm your host, Ketan Ramachandra. Now, let's dive in. In mid to end March, US equity indices soared to record highs, fueled by optimism about a robust economic rebound and solid corporate earnings. The S&P 500 made a record daily close at 5,254.40 on the 28th of March, while the Nasdaq 100 achieved the same feat on the 22nd to close at 18,339.44. However, in the following weeks, we witnessed a pullback as investors and traders took profits as concerns surrounding persistent inflation and elevated interest rates for a higher than anticipated period resurfaced. The S&P 500 fell as low as 4,953.56 on the 19th of April, dropping 5.9% from its all-time high, while the Nasdaq 100 tumbled down to 16,973.94, shedding 8.1% from its all-time high, also on the same date. Now, if we are to be specific, a correction is defined as a decline that is equal to or larger than 10% in the price of an individual security or an index. Looking at the respective declines of the S&P 500 and the Nasdaq 100, I'm sure many listeners have noted that markets did not enter a correction by definition, but the Nasdaq, which hosts all the big tech names, came very close in doing so. However, if we dive a little bit deeper and look at the individual names such as Amazon, JP Morgan, Meta, and Nvidia, all of these companies lost more than 10% in April. These companies did enter into a strong correction over this 4-week period, with Meta and Nvidia even briefly dropping into bear market territory, which is a correction that is greater than 20%. The key question on everyone's mind was whether this recent correction was healthy. Corrections, defined as temporary reversals in market trends, are a natural part of the market cycle. They allow markets to recalibrate, consolidate gains, and weed out excesses, ultimately laying the groundwork for sustainable long-term growth. While corrections can be unsettling, they are not necessarily a cause for alarm. In fact, they often provide buying opportunities for investors and traders to enter the market at more attractive valuations. Moreover, healthy corrections can help prevent asset bubbles and excessive speculation, which can lead to more severe downturns in the future. Now, looking at the present situation, US equity markets have since rebounded strongly from this correction, with the S&P 500 and Nasdaq 100 making new all-time highs once again in mid-May. However, there's always the looming concern. Could another correction escalate into a bear market that could be triggered by various factors such as economic downturns, geopolitical tensions, or unexpected shocks to the financial system? At the present moment, while there are legitimate concerns about inflation, elevated interest rates, economic slowdown, and geopolitical uncertainties, the underlying fundamentals of the US economy remain fairly robust. Corporate earnings are strong, economic growth is steady, and fiscal stimulus measures continue to provide adequate support. Therefore, while correction is warranted, there is reason to believe that future corrections in the stock markets may result in a healthy outcome rather than the onset of a bear market. As always, investors must remain vigilant, monitor key indicators, and stay diversified to navigate market fluctuations successfully. That wraps up today's episode of A Healthy Correction for US equity markets. We've explored the recent pullback in the stock markets and pondered whether it represents a healthy correction or a precursor to a bear market. Join us next time for more insightful discussions on finance and the global economy. In the meantime, do remember to subscribe to our podcast here at IronFX, where we are dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.